In this week's look at WTI crude oil, has it got more to give, or is it stalling at the mid to early $80 mark? I'm going to dig into the technical analysis to find out. Hello, I'm Stephen Hode, trader and founder of TheStopHunter. So before we can carry on, a risk warning for you to pay close attention to. The content in this video is not investment advice, so please seek the advice, help of financial professionals or financial advisors before investing and trading. And trading and investing involves a high degree of risk and your money is at risk, so be very careful. So with that out the way, let's get on with the analysis. So the takeaway from our look at the sentiment indicators is that seasonality is weakening off now into, say, late November before it starts to pick up once again. And if we look at the commitment of traders, in particular the black line there, which is the large speculators, also just sort of weakening off a little bit as the price over the last week or so has gone a bit more stagnant. So probably more of a neutral, weaker bearish outlook in terms of sentiment. The Baker Hughes rig count is still looking positive though, and if we focus on the US line there, change from the prior count up 2, and from last year change plus 248, so the barometer for the oil industry still looking quite strong. So inventories, and I really use this for anomalies or outliers, actual versus forecast, to see if that creates some volatility to the price action. But for those interested, last week's figures worse than expected at 4.267 million barrels, and this week forecast for 1.567 million barrels. So onto the weekly line chart for WTI. I've kept on the Fibonacci's from previous weeks because that top number around $75 was tested 3 times, so it's quite a significant break upwards. So to me that's the pullback support around 75, and if that doesn't hold, it's down to 63. Upsides in the much longer term, $91, $92, and then it's that magic $100. Whether it can get there or not is another thing to be seen. It looks like it's just taking a rest at the moment and deciding where it may want to go next. Is the daily Heikin actually giving us anything different? Well, not really. If we go to the signals at the bottom, the RSI one, bit negative neutral, and the regression green line there heading towards the south, weakening off a bit, so a bit neutral there on the signals. Volatility, early 20% annual volatility there, nothing special, quite quiet, as is volume above that. And then if we head up onto the price, still got our buy signal in play, although again that's just coming back into the box, those 2 pink lines there, to create maybe a more neutral feel. The price is trading smack bang in the middle of the 2 standard deviation regression bands, so again it does still have some upside to maybe around about $90, but also some pullback to, like I said, the early 80s, mid 70s, but generally though in the shorter term a bit more neutral. So I think with the Renko this week it's more about timing. Now this is looking at more short-term action. I've used a 50-cent block size on the Renko chart, and if we look at our signals, the RSI at the bottom, sort of weak, sort of bearish, but just turning up a little bit. The stochastic definitely bearish, and the regression, you could call that still bullish. So a mixed bag from the signals. Price still trading above the moving average, and again our Renko block 2 pink lines set up there again, like the Heikin actually moving into the neutral zone. Price just hit that top $85 sort of area before settling down, consolidating, like in the previous charts, considering where it wants to go next. And if it can break the $85, then we've got 2 Fibonacci lines above that, at $91 and $99. Downsides, then I think you're probably going to look at $76, $75 for a pullback, and then the early 70s under that, and maybe some support around that 200 moving average, which is sort of heading into that zone anyway. So at the moment I would say neutral on the Renko, with a bullish longer term outlook, but like I said, it's all about timing, using those indicators to get in to the trade in either direction. So for the first time in many weeks, I've downgraded WTI to a weak bullish from bullish, just taking on a bit of caution here as things sort of settle down. We have had a big run up, it's a bit of profit taking, it's consolidating, it's deciding where to go next, and our sentiment factors become a bit weaker as well. The high Kanashi a lot more neutral, the Renko in the shorter term also becoming a bit more sort of weaker bullish. So like I said, giving a weak bullish there overall. But if we focus on the targets, no real changes to the upside, 2.621 and 4.621. The big change is to the downside, which becomes more attractive at 1.75 and 3.25 to 1, as the odds, the chances of a short trade become more legitimate. But like I said, overall, the situation still remains in a weak bullish technical setup. So the recent bull run for WTI just slowing down a little bit. Doesn't mean it's ended by any means. I think at the moment it's more about timing and watching the charts very closely for the next sort of step. Is it going to break out, above that 85 zone up to 100, or down to sort of the early 80s, mid 70s? Like I said, watch the charts closely. Let me know in the comments below where you think crude oil price is heading next, or you got any other opinion about the analysis in today's video. If you like today's video, please give us the thumbs up. Don't forget to subscribe and hit the bell button to receive future notification of content such as this. If you've liked the technical analysis that I've produced in the video as well, I'll put a link in the description for you to follow there if you want to learn more. All that's left for me to say then is thanks for watching, good luck with the trading, and I'll see you in the next video.